Okay, so here is our day 2 agenda. We are going to watch a couple brief kind of introductory type videos. One is just kind of a little snippet of what activities look like in a payroll department. So, and this is just one example of what a payroll department might entail. Working in a payroll department might entail. This particular payroll department is of a city. I think it's a city payroll department, and so you'd see what it would kind of look like in the public sector, which might be a bit different from the private sector. And then we're going to start looking through chapter 1, going through some of the slides we're talking about today. And like I said before, it's a little bit dry material in chapter 1. We're talking about the different labor laws, fair employment laws, and tax laws. Now, the only time that we're really discussing the fair employment laws, and I'm going to talk to you a little bit about the difference about what those are in our lecture too, is really here in chapter 1. It's just an overview. It's mostly human resources that's going to have a deep knowledge of those fair employment laws, although there is one in particular that we do pay special attention to from a payroll perspective, the FLSA, and we're going to go into a lot deeper detail on that in chapter 2, but we'll get an overview of that one in this chapter as well. But then we're also going to take a look at the tax laws. Those are the ones that we are mainly interested in because they're the ones that tell us exactly what we need to do in order to prepare those paychecks, which is obviously what the payroll department does. So we're going to get an overview of those laws, and you'll see with each chapter, starting with chapter 3, we're going to go into more detail on each of those tax laws and what they entail, and more into calculations, less of the dry stuff. Like I said, chapter 1 is kind of dry, but we'll get more into some calculations starting in chapter 2 and then beyond. Because I know that's why you're here, is for the math and for calculating all that stuff. That's what your interest is. But we will get an overview of those. I've got another real short video just about some of the basics of employment law. Because I am a tax accountant, I am not an expert in employment law. So that kind of will give you probably a little bit, just a little bit more detail about what we're talking about overall with these employment laws. Then I do have a activity for you to do as a group, and I put you into groups, and I realize I think there are a few people missing today, so we might have to kind of mix up the groups a little bit differently. But I do have a project, group research project for you to work on. I see that, I mean, you probably at least have a phone with you with internet access. Most of you have a computer with you, so that's good. But I'm going to have you take about 30 minutes to answer some questions, do some research about one of the employment laws that specifically we talk about in this chapter, so that you can go, each group will go a little bit more in depth on one particular law. And I'll let you as a group decide. I just don't want people doubling up on which laws they take a look at. And there are a series of questions here that I'll want you to look at. So that's kind of our agenda for today. Are there any questions before we get started? No? Okay. So hopefully this link and the volume works. Want it to be too loud.
Pay all Adams County employees. It's a very daunting task. It really is our job. deposits, just their name and information and donated, but they don't have the retro stuff and the termination paperwork to pay attention to. Each day is something different. We have to make sure that you're taxed properly. We have garnishments, levies, child supports that come out. And I think a lot of people do have the misconception that, we only have a monthly payroll, so what do we do the rest of the month? And they don't realize that we have a ton of things to do all month long. We have about 1,900 employees, and last year we paid about $113 million in gross wages and about $30 million in taxes. So our number one goal is the accuracy of the paychecks, because money is very personal to everyone, and so it's very important to us to get everyone paid accurately. I feel like we make a huge impact on the employees just because of the fact that they're working to pay their bills and to have fun in life. So I feel like if we don't do our job well and accurately, that will impact them. People's money is important to them, and I want to make sure that we pay them correctly. When we have a quiet payday, that's when it's probably the most rewarding, because then we know that there's no questions on the checks. It's not just the push of a button to push a check through the system. It takes a lot of work in prepping and processing. It's not just cutting a check and it's done. It's a process. Process everything else is giving yourself enough time to do those checks and rechecks and triple checks and everything, just to be sure we have it correct when we do hit that button. In payroll, there really is no room for error. It's a lot of people and a lot of little details to check in such a small window. And during payroll week, we want our focus to be that we're getting all those checks and things looked at before you get your check. We catch a lot of the little things to have that human eye looking at it. It catches any errors that technology may not. And when you have something that just clicks and just works and everything kind of flows through how it's supposed to, it's the most amazing feeling, because if you're off by 2 pennies, those 2 pennies can give you a headache for an hour, 2 hours, 3 hours, even a day sometimes. So when things work, it makes life a lot easier. Like numbers, it's a lot about the numbers, but what's different for us is it's a lot about the people and the employees, and it's about helping them, and that's what makes us a little bit different. It really takes all of us to get it all done. Everyone is on the same page as far as the importance of getting the payroll out. It's been extremely nice coming to work with a team like that. The most rewarding is the connections that we have, because that's what it's all about at the end of the day. When you get those people that say thanks for paying me, that always makes it really fun, a little bit more rewarding.
Okay. So a couple of things I want to point out in that video that they mentioned. One was probably the supervisor, the blonde woman, talked about how, they think, a lot of people think that we have nothing else to do during the rest of the month. It's just during a payroll that we're busy, and that is absolutely not the case. Payroll is a really demanding profession, extremely demanding. And as they had also mentioned, there's really no room for error, because if somebody's paycheck is off, if it's less than what they're expecting, they will notice it, right? Now, if it's more than what they're expecting, they'll probably notice it too, but they may or may not say anything. But if it's less than what they're expecting, or if something just doesn't seem right, you certainly hear about it. So that detail-oriented mindset is really needed in this particular profession. One other thing that I wanted to point out that you're going to become a lot more familiar with throughout the semester are the acronyms. There are a lot of acronyms and letters and numbers and form names that are used. I think she mentioned, the W-2s, there are W-4s, there are I-9s. There are all these form names that we use this shorthand for to understand. And when you're first getting into payroll or tax in general, you may not be familiar with what some of those things, those form names, and some of those things are referring to. So by the end of the semester, you'll be very familiar with what all of those mean. But as we go through, if I say something, if I'm talking about the FLSA or the ACA or the FMLA, and I use an acronym and you're not quite sure what it is I'm saying, don't hesitate to raise your hand and just say, hey, remind me what that acronym means, what exactly you're talking about. When they talked about how, it's not just during payroll time that they are busy, I'll point out that right now it's January. What happens in January? Who's had a job before where they paid taxes? Okay, what happens in January? What do you get in the mail? Your W-2 forms, right. Right now, payroll departments are very busy preparing those W-2 forms. Maybe some of them have already generated them. They've got until the end of the month to get them out to employees. So this is a very, very busy time. This is their tax season. So we think of, with tax accountants, we kind of know about the concept of tax season, mostly February through April 15th. For payroll departments, they are, hi, what's your name? Daniel, okay, good, thanks, come on in. For payroll departments, this is their busy season, right? And although they have several busy seasons throughout the year, and when we get into talking about some of those forms that I just talked about, we'll learn about the deadlines, the different deadlines that payroll encounters throughout the year. And you'll learn exactly why it is. It's just kind of a never-ending cycle. They'll get finished with one thing, and then another thing starts up again. And for the right person, that is a fantastic job to have. There are a lot of people that really enjoy that constant kind of, it's always going. There are other folks, that's not quite their bag. But just a couple things that I wanted to point out there. Was there anything else that struck you from, yeah?
When you mentioned acronyms, when she said quiet payroll, is that an acronym?
No, I think she was just referring to when she doesn't hear any complaints back from anybody, then that's a good payroll. Obviously, that kind of holds for pretty much any job, right? But yeah, that's what she was referring to there. Thanks for the question. Any other comments, questions? Okay. So just a little intro there. Let's start looking at these PowerPoint slides now. Actually, one thing. Well, no, I'll do this first. So if you have access to the slides, you're welcome to follow along with me. I'm going to kind of go through some of these laws a little bit fast because they're all explained in more detail in your chapters, right, and in your reading. I don't want to reiterate, but I'm just going to give you a little bit of an overview of each of these laws that are important. But to start out with, so the things that we're going to talk about in this chapter, again, those various laws that affect employers in payroll as well as in human resources. And we will talk about the fact that human resources and payroll work very closely together, and you'll kind of see why that is as we go through this chapter also. Talk about some of the record-keeping requirements that the laws mandate. The procedures that are followed in the human resources department, exactly what does human resources do, since we work closely with human resources. Probably a good idea if we know a little bit about what they do. And we're going to talk about different types of personnel records that businesses are required to keep, and the type of information that is kept on each of those personnel records. And then we're going to end the chapter talking about these two reports, which we use continuously throughout the semester: the payroll register and the employee earnings record. So both of these documents, they're really spreadsheets, Both of these spreadsheets are integral to the payroll function and contain pretty much all of the information that is necessary in order to process payroll and in order to process all of the required reports, both quarterly reports and end of the year reports. So we're going to spend a lot of time looking at that payroll register and the employee earnings record. And like I said, it's something that we go back to in pretty much every chapter as well. So you'll become quite familiar with that. Okay, so just a little kind of background. And this is from 2023. Robert Half is a company that does they do research on different professions, what's going on in different professions, and they look at the salary. So the average salary for a payroll manager in 2023 was $83,500. I would imagine that is probably higher by now, since it's been about a year since that was completed. We've had a little bit of inflation since then. Average salary for payroll clerks, $52,750. I have, for those of you who are in the specialist program, at some point you're going to take that accounting professionalism class. And within that class, we talk about the market within the Des Moines metro area. And one of the contacts that I have is a gentleman. He's a recruiter from, I can't think of the name of his company off the top of my head. But he specializes in accounting. And he consistently tells me every single time that I talk to him that payroll is one of the more in-demand professions in the area. They struggle to find payroll professionals. And that salary, that would be an average, but even for an entry level, he's looking, last I knew, he was telling me about $45,000 for entry level payroll clerks. And this would be somebody just coming in with or without the degree. Of course, the degree is going to get you a higher salary and make you more attractive to potential employers. But that's a fairly good, and we're talking with benefits as well. So that's pretty accurate from what I've heard from that recruiter as well. The American Payroll Association is a professional payroll association. I'm going to go to their website real quick here. So what they do is they provide certifications, a couple of different certifications for payroll professionals. Now, again, these certifications are not required. There are a lot of people that work in payroll that do not have either one of these certifications, but they do provide a leg up on getting higher pay and for job applications. Yeah. No, they are not free. It's just like most of these professional organizations, you are going to have to pay for those certifications. The fundamental payroll certification is a certification for entry-level payroll professionals. So these are people who may or may not have any prior experience. You're not required to have any prior experience in order to sit for that fundamental payroll certification. I've had several students that have sat for it and have been successful. So, it's something, like I said, it's just an additional item that looks great on a resume, and it shows potential employers that you've gone the extra mile and that you do know the basics of payroll preparation. The cost for sitting for the exam, let's see if we can find it, what it is today. Purchasing the exam. You can take it remotely or in person. So $459 to sit for the exam. If you're a member of the American Payroll Association, it's $100 off. Membership, I think, is not too much more. Well, I can't exactly remember how much membership is. Is there a spot there where you can look at the membership?
Is that a spot where you can apply
I am not aware of grants. That doesn't mean that they don't exist. I'm just not aware of it. I guess this is just background. I thought I could find what the membership cost is. $305. So that certification, they do have review classes as well that they offer to, they're not required in order to sit for the exam. We actually offer, it's not a specific review class, but payroll certification review, which is, again, is an elective in the specialist program. It's a 2-credit class. That is a class that is geared toward those who might be interested in sitting for the exam. So that is a way to get an additional review. It goes through the study, the course is kind of set up to follow the material that's in the exam. Then we also have the Certified Payroll Professional certification. This is for individuals who have worked in payroll for at least 2 years. And so those individuals who are looking at more managerial type of positions. So this is something that after you've been a payroll clerk for a couple of years, you might think about sitting for the Certified Payroll Professional exam in order to increase your qualifications as well. The organization, American Payroll Association, they offer, not only do they offer certification, they've got education, so you can take continuing education type courses. They've got journals, they've got magazines, they help with compliance. This is a big area of compliance. Obviously, payroll is an ever-changing area. It's related to tax law, and tax law is always changing. And there are a lot of legal aspects to it. So it's an area where you've got to keep up on all of those technical, all that technical knowledge. So they provide, they've got, meetings that they put together, conferences, that sort of thing. So just like any other professional organization. But the other thing that they do is, let me get back to my screen, is they put together this code of ethics that helps to set ethical direction for the profession. So as you can imagine, payroll professionals are privy to a lot of very sensitive information, right? When you are in the payroll profession, you know the salaries of every employee in the organization. You know their addresses, you know their dependents, you know their social security numbers, you know all of that information, and information that in the wrong hands could be really damaging to those employees. So it's super important to follow a code of ethics and to get people in who demonstrate ethical behavior. So the American Payroll Association put together this code of ethics, things that, and anybody who is a member of the American Payroll Association would be required to, sign off that they abide by this. But these are great guidelines for anybody working in the profession. And so there are several aspects to this. There are several points that they cover here. I think there are 8 of them. So we'll go through these individually. So to be mindful of the personal aspect of the payroll relationship between employer and employee, ensure that harmony is maintained through constant concern for the payroll professional's fellow employees. So making sure that those relationships are maintained in a positive way. So you're not going out of your way to be antagonistic to folks or to work against the employees that you're there to help. To strive for perfect compliance, accuracy, and timeliness of all payroll activities. So notice it doesn't say to be perfect in your compliance, accuracy, and timeliness. Everybody remember that commercial, that Lexus commercial, The Relentless Pursuit of Perfection? You remember that? This was their logo. They didn't say they were perfect, but they're relentlessly pursuing perfection. So obviously perfection is not really attainable 100% of the time, but to strive for that, to strive to be in perfect compliance, to be accurate, and to make sure that you're meeting all time requirements. And just to practice due diligence in your pursuit of that. The third one, to keep abreast of the state of the payroll art with regard to developments in payroll technology. So to be up to date on all payroll technologies, as well as compliance issues and different laws, right? To be current with legislative developments and actions on the part of regulatory bodies insofar as they affect payroll. So one of those regulatory bodies, of course, would be the IRS, to stay up to date on any new IRS regulations that affect payroll, as well as state and local regulations that might affect payroll.
Do you have like any suggestions on like websites to follow? There's just so much media garbage out there.
Yes, and there's a list. I'm going to show you a list, and I've got it in Canvas, some different websites, and they're mainly government websites. So like the Department of Labor, the IRS website, and that sort of thing. The American Payroll Association is a great resource as well. And even you can find stuff on there for free as well. So some of their stuff you have to be a member in order to access, but not all of it, certainly. To maintain absolute confidentiality of payroll within the procedures of the employer. So we talked about how important it is to maintain that confidentiality with regard to that sensitive information. Refrain from using association activities for one's personal self-interest or financial gain. This would be for those members of the American Payroll Association. Don't go to events just to get business, that sort of thing. You're there to give and take and to exchange ideas. You're not there to market and to network. To take as one's commitment the enhancement of one's professional abilities through the resources of the American Payroll Association. So use our resources when, utilize the information that we provide for you. And then to support one's fellow payroll professionals, both within and outside of one's organization. I don't know who wrote this, but all the ones and the payroll art and everything. It's a little flowery. But just to support your other payroll professionals, right? To provide assistance when needed, and to assist each other. So that's our American Payroll Association Code of Ethics. Any questions before we head on to some of these laws that we're gonna talk about? All right. So these are the ones that we really focus on in this class. We're going to kind of start with the ones that we're going to look at and we're going to go in depth on in subsequent chapters. So the first one, the FLSA. It's one of those acronyms, the Fair Labor Standards Act. We're going to go into detail on the Fair Labor Standards Act, more detail, in Chapter 2. Why do we go into detail on this particular one? This act is administered by the Department of Labor, and this is the minimum wage and overtime law. So this is the act that requires that individuals be paid a minimum amount per hour and be paid overtime for hours worked over 40 hours a week if they meet certain requirements. It doesn't apply to every employee, but it does apply to a lot of employees. So the Fair Labor Standards Act is the piece of legislation that mandates that. That's going to be Chapter 2. Federal Insurance Contributions Act, otherwise known as FICA. If you've received a paycheck, you'll be familiar with that acronym. You've probably seen it before. Maybe you didn't know what it stood for. Federal Insurance Contributions Act. This is Social Security and Medicare tax. So who is FICA and why is he taking all my money? So this is Chapter 3, and we're going to go through what FICA is and what the calculations are for determining FICA to be withheld from employee paychecks. Fun little tidbit, and maybe you didn't know this, maybe you did, maybe you didn't. your employer pays an equal amount of FICA tax on your behalf. So if you have a paycheck, you get $100 and you're paying $7.65 in FICA, your employer is also paying $7.65 in FICA on your behalf. Medicare, Social Security and Medicare. Yep, and that's Chapter 3. Chapter 4, we're going to go into income tax withholding. So this is where we do calculations on how much income tax is withheld for individuals, and then we're also going to talk about how those income taxes, once they're withheld, are then remitted to the federal government, to the IRS. We'll talk about federal, state, and local. Now, lucky us, in Iowa, we don't have any local income taxes. We have other types of taxes. We have sales taxes, we have property taxes, we have gas taxes and all that stuff, but we're interested in the income taxes. We don't have local income taxes in the state of Iowa, but there are some jurisdictions that do have local income. There are some. I have a friend that lives in Ohio. They have city income taxes. They have school district income taxes. They have county income taxes. It's just so many different, and these are just income taxes. They also have property taxes and sales taxes and all of that kind of stuff. But lucky for us, in Iowa, we don't have local income taxes. State income taxes, lucky us as well. We happen to now live in a state that has a flat tax. Everybody is all income is taxed at one tax rate in Iowa. Much simpler. So it makes our jobs a lot simpler too in this class in understanding it. Federal, yeah, that's a little bit more complicated. Okay, but we'll go through all the calculations for that. Chapter 5, we're going to focus on unemployment taxes, and this may be one of those taxes that if you've only been an employee, you haven't been on the end of paying other employees or owned a business, then you may not be as familiar with the unemployment taxes, but employers pay an unemployment tax, and this goes into the unemployment system to pay those individuals who have been terminated from their jobs through no fault of their own, have been terminated from their jobs. So individuals who are receiving unemployment, those funds come out of the unemployment fund, and those monies are collected from employers. Employees don't pay any.
Is that the same as when they get laid off for a season?
Yes. So if they draw unemployment because of layoffs, that is one of the reasons that individuals can collect unemployment. But the funds come from the taxes that are generated through the Unemployment Tax Acts. So that's going to be Chapter 5. Chapter 6, before I get to this, Chapter 6 is where we're going to kind of put it all together and integrate the information that we've learned into the accounting system. This is where we're going to do some journal entries and start working on that final payroll project as well, which is actually Chapter 7, but where we enter it into the system and see how it all fits together. But we have to have all that background before we can do that. All right, so some of the laws that affect payroll, and I'm just going to kind of zoom through these. Fair employment laws. So what exactly is a fair employment law? And I actually found this online. I'm going to hand it out to you just as something to think about with regard to fair employment laws and what they do. Their main function is to protect both employees and employers. And they do it, depending upon the law, they do it in different ways. You're welcome. So for protection of employees, ensuring fair treatment, and that could be fair treatment with regard to pay. Yeah. Oh, I'm sorry. I missed you. You're welcome. With regard to pay, with regard to access, with regard to hiring and firing and promotions and that sort of thing. Safety as well, making sure that individuals at work are working in as safe an environment as they can, considering the circumstances. Obviously, certain professions are going to be more dangerous than others, but protecting employers as well. They help to set some clear expectations so employers know what the guardrails are with regard to hiring and terminating, so they don't get themselves into trouble unbeknownst to them, right? Obviously, there are some employers that get themselves into trouble anyway, but this helps to make it clear for employers what rules they have to follow. Also help to prevent legal issues. Obviously, it's not going to prevent 100% of legal issues, but certainly sets some guidelines for that. Encouraging equality and diversity in the workplace through equal pay and non-discrimination in hiring, firing, promoting, raises, all of that stuff. They help to encourage fair competition. And they mention here, labor standards help to level the playing field, prevent businesses from gaining an unfair advantage by exploiting workers, and to promote economic growth. Helps to boost morale. Well, I suppose it does help to do that, as it mentions here. For employees, they know that their rights are protected, and if there is some sort of violation, that they have some recourse for correction, and help to foster positive work environments, and hopefully adapts to change. Although some of the labor laws, I'm not sure really adapt very well to change, but they talk about, like remote work and gig economy, I guess, side hustles and that sort of thing. We as society evolves, how we work also evolves, and there are lots of changes. And so hopefully those fair employment laws are built in such a way that they can adapt to those changes. And then, they use the example of the Family Medical Leave Act to promote work-life balance and that sort of thing. So just a little, what exactly fair employment laws do. Now, you notice there's really no talk of taxes there. We're talking about making the work environment fair for everybody so that everybody has access to the same resources and the same type of, safe work environment and all of that. And some of the fair employment laws that your book goes through in this chapter, the Civil Rights Act of 1964, this is kind of the granddaddy of most of this. And we'll go into, I think we go into a little bit more detail on that. Age Discrimination Employment Act, Americans with Disabilities Act. There are also state laws that are specific to fair employment as well. So each state is going to have its own rules with regard to and the laws that they make can be more protective of employees. They cannot be less protective of employees than federal laws. So the minimum standard is whatever is in the federal law. So this Fair Labor Standards Act, like I mentioned, we're going to go into more detail on this in Chapter 2. This law was created in 1938. You think about what was going on in 1938. We were in the middle of, toward the end of the Great Depression, right? And before that time, there weren't many protections for employees. There was child labor. There were dangerous working conditions. If somebody became unemployed, they really didn't have any recourse. There was nothing. They could go find another job or rely on family or friends to help them out. During that time, though, there were a lot of changes that were instituted in response to that societal upheaval. So Fair Labor Standards Act was enacted in 1938. It sets the minimum wage. It actually does 4 specific things. It sets the minimum wage, which is currently at $7.25 an hour. Hasn't been raised since, I can't remember the year. If it's 1996, it's been a long time, or 2009. Anyway, it's been a long time since it's been raised. Sets the minimum wage. It provides for overtime protections for individuals that are covered. It mandates certain working conditions, child labor laws. It institutes child labor laws. And then there are some record-keeping provisions as well. Those are the four main things that the FLSA does. Not every employer is covered by it, and not every employee is covered by it. There are certain specific requirements that have to be met in order to gain the protections of the FLSA. And chapter 2, we're going to go more into that. They kind of mention it here. The restrictions have to do with engagement in interstate commerce or production of goods in interstate commerce, but we'll talk more about that in the next chapter. And the minimum wage rates as well. Now, again, just like with any of the other fair employment laws, states can set minimum wage higher than the federal minimum wage, but it can't be lower, right? You can't have, and there are certain states that don't even have a minimum wage. There's nothing on their books that indicate that they have a minimum wage, but they have to abide by the federal minimum wage in that case. So if the federal minimum wage was abolished, those states actually would have no minimum wage. Or they have a minimum wage that's set less than the federal minimum wage, but because the federal minimum wage is more generous, that's the law that has to be followed. So whichever one is more protective. Yeah.
So in that case, say that they got rid of the federal law, which then
Mm-hmm.
so with those things that you said don't have
Mm-hmm.
would they have to then
They wouldn't have to, no. That would be up. It would be up to them, right? It would be up to them. Now, whether they would or not, I don't know. Yeah. But it would be up to the local. Now, chances are, like in the environment that we're in, there aren't a whole lot of people that are at the minimum wage unless they're younger, like high school kids in certain jobs. But even like the jobs at Fairway and those entry-level jobs, because of the economic conditions, it's higher than that $7.25. You're not going to find a whole lot of people who are making that $7.25 an hour. So I would imagine that economic conditions would mandate that it probably be higher. The reality would be that they probably would be earning a higher rate anyway. Yeah. So, but there would be no requirement. If there was no federal minimum wage, it would fall to the states then to decide whether or not they were going to institute a minimum wage. Okay, so that's FLSA Chapter 2. We're going to go through that. Federal Insurance Contributions Act, FICA. Again, this consists of two different acts. Again, another acronym. OASDI, otherwise known as Social Security. OASDI stands for Old Age Survivors and Disability Insurance, which is a lot more than just Social Security. It's not just retirement funds. It provides funds for minor dependents of individuals who would have received Social Security benefits. So if a parent passes away and would have received Social Security benefits had they lived, then the children, any dependent children, will receive a monthly benefit up to the age of 18. So that's the survivors part. Also, the spouse, if they're caring for that minor child, would also receive a benefit until that child reaches age 18. Disability insurance, so it does have a disability component as well. So if you become disabled and you meet the requirements, I understand it's very difficult to actually obtain benefits under Social Security, but people do. But there is a disability component to it as well. They also offer a very generous funeral benefit. So if a beneficiary passes away, their survivors receive, I think it's like, I can't remember exactly, it's less than $500. So yeah, it's not, I was being facetious when I said very generous. It's a very low amount. Yeah. So there are other components to Social Security in addition to the retirement benefits that we're all familiar with. And then Medicare tax as well, which provides health insurance to individuals age 65 or older. So both of these then are paid, and these are paid equally by the employer and the employee. So we're going to go through and do the calculations for that and learn more about it in Chapter 3 as well. Also, it's not just for employees. Anybody who is considered self-employed also is subject to the tax. One little tidbit of that, though, is When you're self-employed, you're both employee and employer, so you get to pay both halves of the tax. That's something that surprises a lot of people who start their own business or have a side hustle or something. They're like, wait, why am I paying 15.3% rather than 7.65%? Well, it's because you're self-employed and you get to pay both halves of that. Yeah.
Doesn't that apply to depending on what like if you're a sole proprietor or LLC?
It depends. So it's specific to individuals who have self-employment income, and those would be so if it's one person and they're not incorporated. Partners and partnerships are also considered to be self-employed.
Yeah.
So they also have to pay self-employment tax on their income. But if you are an owner, like an owner in a S corporation or a C corporation, that's different. Yeah. Yeah.
Is that why people are going after LLCs?
Going out.
Have like the business title up for it?
Going out. What do you mean by going after?
There's like, I don't know, a lot of news, like people being like, oh my God, you can go get an LLC and be an actual business.
Yeah, but the LLC is only a state legal entity. It's not a tax entity. So if you're an LLC and you're an individual, there's no special tax treatment. You're just like any other self-employed individual, but you do have some legal protection. Whereas if you are an individual and you form a corporation, now that changes the tax structure of it. But the LLC on its own doesn't change the tax structure, doesn't change how you're taxed if you're an individual. But
So if you're a corporation and you're an employee,
mm-hmm.
you still continue income?
So if you're an employee of a corporation that you own, so yes and no. Because you own the corporation, then yes, indirectly you're paying it, right? But if you own it with other people, then you're kind of sharing in the cost. But no, if you are an employee of a corporation that you own, like an S corporation, you're treated as an employee. So that's kind of a special category there.
And that's
So,
not the same like shareholders.
well, it is. We're getting a little bit deeper here than. If you're an owner of a corporation, whether it's an S corporation or a C corporation, you're a shareholder. But you can also be an employee at the same time as being a shareholder.
So what if instead of salary you're like getting the dividend still?
Okay, so that's a little, I see what you mean. There are some special rules with regard to that because the IRS knows that owner shareholders of corporations will try to avoid the self-employment tax, the FICA taxes, by just saying this money is dividends or this money is a distribution, not wages. So the IRS is clued into that, and they're very careful to make sure that if you are an employee, if you're providing services to a corporation that you own, that you have to pay yourself a salary. And that salary has to be subject to FICA tax. So they're very careful with that because that is a loophole that many people have used to get around paying FICA tax. So anyway, I'm going to move on. Great questions, though. Obviously, you guys you've got some background here. We're going to learn about Social Security and Medicare tax, together known as FICA tax. And then income tax, federal income tax that is withheld from employee paychecks. There are a couple different ways that we calculate it, and we're going to learn both of those ways of doing it. And then state and local income tax. We'll look at Iowa and what Iowa is doing. Like I said, it's pretty easy these days because there's only one tax rate, whereas with federal income tax, we have what's called a progressive tax system, where the best way that I can think of to describe it is the more you make, the more they take. So it is a marginal tax. So if you are at, say, income level of $10,000, your tax rate is 10%. But then If you go up to 15,000, that additional 5,000 is going to be taxed at 12%. And then so on and so forth. We start at 10%, we go up to 37%. So our withholding for that income tax has to reflect what those marginal tax rates are. So that's why it's a little bit more confusing, and but we've got a couple of different ways to do that calculation. We're going to look at both ways. Okay. Let's see. And then federal unemployment tax. So FUTA, this is only assessed to employers. And this particular tax, and there are two different types of unemployment tax. There's FUTA, federal unemployment tax, and SUTA, state unemployment tax. They work together. They work in conjunction with each other. FUTA taxes are collected to help administer the program. So you'll see when we do these calculations, the FUTA taxes aren't really very high. It's a pretty small amount, relatively speaking. There are some complications to it with regard to this credit. Employers are allowed to lower their FUTA tax if they meet certain criteria. And most employers do meet that criteria, but that credit can be clawed back if they start to not meet the criteria. And I'm not going to go into the criteria yet. We'll talk about it in Chapter 5. But that tax rate could vary by employer or depending upon the state that you're in as well. But the FUTA tax is collected only to administer the overall unemployment tax program. The SUTA tax, state unemployment tax, is paid to the state. It is a higher tax. It is a much greater tax that employers pay because this is where the benefits are drawn from. So obviously the administrative part is not as expensive as actually paying out the benefits. So that's why the SUTA taxes are paid at a higher rate, but they're paid to the state. Okay? So each state is going to have different rates, different wage bases, which means that's the amount that is actually taxed. They're going to have different rules state by state. So this is where if you're in the payroll profession and you have multi-state employees, you have employees that are from different states, or maybe one employee that's working in different states, can get a little bit more complicated because the rules are going to be different in different states. So, yeah.
And just for clarification, so for say you receive an employment, you pay taxes on it.
Yes. Yes.
Now
You pay income tax on it.
So what is the difference between from the state unemployment tax act and just the regular federal unemployment?
So in that case, the difference between those two is the federal, it's where the funds, the difference between it is where the funds go. So the federal government with FUTA is collecting funds to administer the overall unemployment program nationwide, because all of the state unemployment programs have to be approved by the federal government and they work together. So what the federal government is doing, the amount that they're collecting, is just for administrative costs. But what the states are collecting is to actually pay out benefits.
So you're only paying taxes on under SUTA and not.
You're actually paying, you are subject, any unemployment benefits that you receive are subject to both federal and state income taxes. So for the recipients, they're receiving those amounts, but they're going to have to pay tax on it too, income tax on it. There was a temporary exception made during COVID when they, I don't know if you recall, they had some special unemployment rules because we had such huge unemployment. All of a sudden, there were additional funds. Like for the first time ever, the federal government actually did pay benefits out. They don't now, they didn't before, and they don't anymore, but during COVID, they did. And during that time, unemployment benefits were not taxable. They weren't subject to federal or state income tax. But we're back to pre-COVID, and now there's no federal benefit, and any funds that are received, any benefits received are subject to state and local income tax, or state and federal income taxes. Okay. Great questions. Let's see. Okay, so those are 5. They don't really go through Chapter 6 because that's going to be a bunch of journal entries. and we're not going to do this knowledge test. Okay, really quick, because what time? 1:50. All right. And I can give you some time in the next class to finish up on some of that research too that I want you to do. Okay, so the first one, Civil Rights Act of 1964. Now we're into the fair employment types of laws. And like I said, we don't go into detail on these. This is just kind of an FYI. These exist. They exist to protect both employees and employers. So it's just kind of a quick rundown. Civil Rights Act of 1964, which is also known as the Equal Employment Opportunity Act. So no, it prohibits discrimination in hiring, firing, promoting, compensation based on these attributes. So color, race, religion, national origin, or gender. Also applies to unions. Also provides that protections from sexual harassment. Funny thing about this law, though, is it prohibited all these things, but when they passed it, there was no punishment for those who were found guilty of violating it. So there was another Civil Rights Act in 1991 that was passed that provided some punitive damages for when you actually did that. So, what's the it's not real easy to get people to correct their behavior when there's no punishment for bad behavior, right? But for a long time, there was really no punishment. But now employees can sue for those types of things. It applies to all employers who engage in an industry affecting commerce and employ 15 or more workers in each of 20 or more weeks during the current or preceding calendar year. The point here is that it doesn't necessarily apply to everybody. There are certain restrictions on who it applies to. This whole thing about affecting commerce, you're going to see this again and again. Commerce meaning interstate commerce. The federal government really doesn't have a whole lot of power when all activities happen within one state. Once any activity crosses state lines, though, it becomes federal. So, but nowadays it's really hard to have a business without having interstate commerce, because even sending an email or receiving an order or a phone call from some other state, it means it's interstate commerce. So, but you'll see that a couple of times where it says affecting commerce, interstate commerce is what they're talking about here. Okay. Let's see. So 1991, then they implemented compensatory and punitive damages when the discrimination was intentional. So, yeah.
So just can you give us an example, like prior to the
yeah.
What did it
So, what did it, like what did interstate commerce? Okay, so think about maybe like a small bakery, and they get all of their product from just a local shop, and they only sell to people locally. They don't mail anything out. They don't take orders from anybody outside of the state. They're all just really local, maybe like a farmer's market kind of thing. So it's all within that one state. They're not actually, they're not placing orders to be shipped in, and they're not sending orders out. Nowadays, though, it's really difficult not to have some sort of commerce that does involve interstate, right? Like you send an email, you place an order on Amazon. Now you've engaged in interstate commerce, because that order is coming from a company that is, even though they have a physical presence here, they're located outside of the state. And probably the product is being shipped from some other location.
So I guess my question is, why would they put that in there and only,
because the federal government only has jurisdiction over commerce that goes between states. Otherwise, it's the state that has jurisdiction over that. So the state could have restrictions as well. Like if it's all within Iowa, but Iowa says, well, you can't, if you're a business in Iowa, you can't discriminate based on these things either. Well, then you are subject to Iowa law in that case. But if you're not engaged in interstate commerce, then you're not subject to the federal regulations. You're subject to the Iowa ones. Does that make sense? It's just you're going to be under a different jurisdiction. So, yeah.
So then does the federal government have jurisdiction from countries in that sense?
It depends on, well, now we're getting into areas that I don't have expertise on, but my understanding is it would depend on whether there's a treaty or not, like with that other country. But if they don't, like you can't, well, like if you're ordering from overseas and it's coming directly to you, I think they would probably consider that to be interstate. I mean, also you're probably using the internet in order to do that. And the internet is going to involve interstate activities, that function in and of itself. Practically speaking, the interstate commerce pretty much applies to everybody. Yeah. I mean, it's really difficult these days not to be engaged in interstate commerce.
That's what I was.
Yeah. Yeah. It would be very limited circumstances. Yeah. Yeah, they wouldn't have, but like I said, there may be some other local law or state law that covers it. Exactly. Yep. Let's see. Age Discrimination Employment Act. So this prohibits employers from discriminating based on age, but it only applies to individuals who are, believe it or not, 40 or older, which doesn't seem like that's not very old. But again, it's only for employers engaged in interstate commerce with 20 or more workers. So there's that interstate commerce requirement again. So that's the Age Discrimination in Employment Act. There is an exception. Executives 65 or older who have held high policy-making positions during the 2-year period prior to retirement and entitled to an annual retirement benefit of at least $44,000. So they can be forcibly retired. There are also certain industries where you can be forcibly retired due to your age. The airline industry is one of those. Pilots are required to, I think 65 is the age now. It used to be 60. Let's see. Americans with Disabilities Act, a lot of people are familiar with this. The ADA, that was passed in 1990, which prohibits employers and these other agencies from discriminating against qualified individuals based on disability. Now, that qualified individuals, obviously there are certain professions where you can discriminate. You don't want a visually impaired bus driver, right? That sort of thing. You can't. So this is where I say defined as persons who can perform essential functions of the job with or without reasonable accommodation. So there are some exceptions to that based on the nature of the disability and the requirements of the position. But generally speaking, so there has to be reasonable accommodations for it as well. Let's see. Federal Personal Responsibility Work Opportunity Reconciliation Act. This one requires all employers with new employees to report their new employees to the state within 20 days of hire. This has to do with child support. So if you've ever worked in a business office before, or in a payroll office or accounting office, you might be familiar with this. If you've ever filled out a W-4 for the state of Iowa, you might be familiar with this. For the state of Iowa, there are 2 parts to the W-4 form. That's the form you fill out when you start working that indicates what withholding you are claiming for the state of Iowa. Not only is it a form that where you indicate withholding, it's also a form that employers will use then to fulfill this requirement, because there's a second part to that W-4 form that provides the information necessary for this. So within 20 days of hire, each individual has to, each employer has to submit information on the new hire to the state. What the state does is they check against child support records. This is how they determine that if somebody needs to have child support withheld from their paycheck or not. So if somebody is required to pay child support, Employer sends that into the state. State checks it against their records and then tells the employer, this is how much you need to withhold for child support. Okay? So that's what the federal personal responsibility and work opportunity.
Would that be the same as like if you own the state for like criminal charges?
No, this one's different. This one just has to do with child support. Yep. Yep. Although they may use the information to track people down that way as well. Immigration and Reform and Control Act. This is the act that mandates completion of an I-9 form for new employees. So if you've ever been a new employee and you filled out, you know, they give you that packet of forms that you've got to fill out. I-9 is in one of those, in that packet. And it's a form that verifies both your identity and your eligibility to work. So if you are, not that you're a citizen, but that you're eligible to work for the position that you have been hired for. And so the employer, these forms don't get sent off anywhere, but the employer has to keep them on file when they're filled out by the employee. So has to be signed by the employee no later than the first day of employment. So employers have to get that done ASAP as soon as an employee is starting employment. Let's see. What else? Oh, they talk about the E-Verify program, which is a system that the government runs that allows employers to check employment eligibility, so they can run Social Security numbers through a system just to verify that somebody is eligible. So it's, I guess it goes to the database, the Social Security and Department of Homeland Security database, because there are penalties for hiring individuals who are not eligible to work. So that E-Verify program helps to protect employers. So the employers can say, well, so if an employee is using a fake Social Security number, the employer really doesn't know that. And if they ran it through the E-Verify system, they can show the federal government, look, I checked it through your system, and this Social Security number that the employee gave me showed as they're eligible to work. So it helps to protect employers from government action. Family Medical Leave Act. This provides, and this is for employers with 50 or more employees, and they're more specific, 75-mile radius, for at least 20 weeks in the current or preceding calendar year. So that's the requirement to be covered, to be a covered employer. And what it does, if you work for a covered employer, it means that you get 12 weeks of unpaid leave for childbirth, adoption, serious illness, or care of a child, spouse, or parent. You don't have to take all 12 weeks at once. You can scatter it about throughout the year. I think you do have to have worked for the employer for a certain period of time as well. It is unpaid. There are some states that have paid leave now, but those are state programs, so they wouldn't. Here we're just talking about the minimum requirements by the employer. So you can keep your health insurance as well, but the employer, you have to pay for it. So you'd have to pay for all of the health insurance if the employer didn't help to subsidize it. And the employers are allowed to charge an administrative cost, like a 2% administrative fee for that or something like that. So some other specifics there about FMLA. I'm going to run out of time for we'll save this till next week since I'm running out of time. Uniform Services Employment and Reemployment Act, USERRA. So this gives military personnel the right to take a leave of absence from a civilian job in order for them to fulfill their active military service, and they have the right to return with the same seniority. They won't necessarily get the same job back, but they're not going to lose any benefits. They're not going to lose their pay rate or their where they fell in the hierarchy while they were gone. Okay. So it has to be to the employee's original position or its equivalent, unless the employee was dishonorably discharged from the military. So if they were dishonorably discharged, then they give up that right to get their position back. Return must be granted within 2 weeks of the job request. Health benefits must be started without any waiting period as well. So these are employees who are in the military and they are called up for active duty service, but they have a civilian job. They get to come back to their civilian job at the same pay rate that they had before. ERISA provides not retirement benefits, but retirement protections. Employers are not required to provide a retirement plan for their employees. But if they do provide a retirement plan, then the employees are protected by by this particular legislation. So ensures that workers that are covered by private pension plans receive benefits in accordance with their credited years of service. For the first 5 years, they're not entitled to vesting. Vesting means you get the money that your employer put in. You always get the money that you put in. But if you're vested, that means that everything that your employer put in, you also get. After 5 years, you have to be 100% vested. So the employee will receive 100% of the amounts that were put in to that retirement fund. And there is a 3 to 7 year vesting. So there's like a graduated vesting that could occur as well. So usually that's not, at least in my experience, most employers don't have a problem with abiding by those requirements. There's some more. I'm not going to go into details about ERISA, but Affordable Care Act. So this is otherwise known as Obamacare. I don't know if they even call it that really anymore, but so it was 2 pieces of legislation. So the Healthcare Education Reconciliation Act and the Patient Protection and Affordable Care Act. I don't really specifically remember what the healthcare and education part of it was, but this is the one that that provided that everybody is entitled to purchase health insurance. It used to be a lot more stringent than it is. They've kind of watered it down. There used to be a penalty for not having a health insurance. So if you didn't, everybody was required to have health insurance when this first came out. And if you didn't, you were penalized for not having health insurance, which was a way to try and encourage people to get health insurance. For a lot of people, though, the penalty cost less than the health insurance did. But this one, there's no penalty anymore for not having health insurance, but there still is the opportunity for everybody. It's guaranteed health insurance. Now, it doesn't mean it's going to be affordable health insurance. And for a lot of people, it's not affordable health insurance. But the 2010 is when that was passed. Yeah, they had, and for a while their employers were required to provide health insurance. I don't think they have to do that anymore. There were just a lot more requirements when it first came out, and then it became, I think, too expensive and unwieldy. All right. Other state laws. So states have workers' compensation laws as well. Workers' compensation, different from disability. Different from unemployment. So workers' compensation covers workers when they're injured or become sick or die on the job. So while they are working, they have an accident, construction worker falls off a roof and breaks their hip, then workers' compensation, the employer is required to have that insurance, it's a type of insurance, to cover the injuries of the employee. Also provides death benefits if an employee dies as a result of activities while on the job as well. It's complex. It's based on the industry that the employer is in, what their payroll is. There are a lot of different factors. Like I said, it's insurance, so it's going to be a complicated mix that determines what that premium, workers' compensation premium is. But if you're an employer in the state of Iowa, and I think in most states, probably all of them, you are required to have workers' compensation insurance. And it's not cheap, depending upon the industry that you're in, because some industries are riskier than others. You're not going to, CPAs have a lot fewer accidents than construction workers do. paper cuts, generally, you don't have to go to the hospital for a paper cut. But in the construction industry, that's a little bit different. What else? Disability, state disability laws. Iowa does not have a state disability fund. Some states do. California is one of those states that does. And employees generally pay into that fund as well. So if you're an employee in California, you're having Social Security benefits withheld, you're having Medicare, or you're having Social Security tax withheld, Medicare tax withheld, federal income tax withheld, state income tax withheld, possibly local income tax withheld, and state disability taxes withheld as well. So in Iowa, we don't have a state disability, but there are certain states, and when we go through chapter 5, we're going to see what some of those different states are that have state disability laws. And those will factor into some of our calculations in our homework problems. Whew, okay, those are all the laws. Well, that's an overview of the laws. Like I said, we're going to go into a lot more detail on the FLSA. You remember what that stands for? Fair Labor Standards Act. I don't expect you to remember right now. Fair Labor Standards Act, we're going to go into that a lot more in chapter 2. I'm going to pass this out to you guys. This is what I was going to have you do as a group. I'm going to give it to you now, and we'll do this. Let's see, we've got 5 minutes left. Let's determine your groups so that you guys can work on these. And I'll give you a little time in class too on next Wednesday. We don't meet on Monday. It's Martin Luther King Day on Monday. So we do not have class on Monday.
Thank you.
You're welcome.
Thank you.
I won't forget you this time. You're welcome. There you go. So let's see. I want to make sure everybody has a group to go into. Let me turn this off. I need to record this part.